All right, let's talk a little bit about NVIDIA and some research this morning.
All right, Morgan Stanley put out a piece, and it's very confusing because they're cutting the price target. I don't know what that's about, but this is what you need to know. This is supply limited. They just don't have enough. There's a shortage of inference chips. The core demand for GPUs has shot higher. So in the last 4 weeks, business has accelerated. I want to meld this with what was said on the call last night for Alphabet, where they basically said, listen who we are. We're the ones who have the call on NVIDIA. We're the ones who have Blackwell. We're the ones that are going to have Vera Rubin. That's who we are. Now, David, for a while, that was, remember after the DeepSeek moment, that no one seemed to want to know about NVIDIA? Well, let me tell you, NVIDIA's back. Do I want to buy it here? I don't know, because remember what you said about China?
Yeah.
And we're waiting for the diffusion rules from Trump about whether the 18 countries or whether they're going to expand it or contract it. But when it comes to demand, it's insane.
It's insane. But you pulled away from the stock in terms of... Really, it was quite a moment because you've been a supporter of this company's stock since time immemorial.
I still have the huge position for my trust, but I just think that this is much more in the hands of the government.
So what was the call that you made then?
I said that because I don't know the diffusion, because I don't know how the government...
But was the call to sell it or just
to trim it? To trim it. It had been my second largest position. And I felt that, well, wait a second.
So are you already having second thoughts?
I wouldn't do anything.
You would?
No, but I have to tell you that it's up to the government.
Yeah.
And it shouldn't be, but that's what you're playing with.
Right. That's true. All right.
NVIDIA has dropped about 30% from its peak. The stock has experienced this before. NVIDIA's share price has dropped by as much or more from its prior peak 8 times since its initial public offering, IPO, in 1999. Crucially, NVIDIA always finally recovered well following a sharp sell-off. Given this, it is perhaps not surprised that Wall Street is currently yelling for NVIDIA stock to be purchased. But are you going to pay attention? In the second half of April, 9 analysts gave NVIDIA ratings. 8 advised purchasing the stock. According to Raymond James, NVIDIA is a strong buy. D.A. Davidson was the only exception to the overwhelming outcry in favor of NVIDIA. The headquarters of this financial services firm are located in Great Falls, Montana, a long way from Wall Street. However, based on the accuracy of their stock ratings and price targets, experts like D.A. Davidson have a neutral opinion for NVIDIA, with a price goal that represents a 15% upside potential. Can you guess the percentage of top 10 analysts on this scorecard who advise purchasing NVIDIA stock? If you answered all of them, you deserve a pat on the back. The 12-month price objective set by average analysts for NVIDIA is a staggering 58% higher than the share price as of right now. Even more optimistic are some leading analysts. For instance, both Rosenblatt and Cantor Fitzgerald recently released price targets of $200, indicating a 92% upside potential. Everyone on Wall Street agrees that NVIDIA is a fantastic stock to purchase at this time. Why the zeal? NVIDIA's growth prospects continue to be good, according to many analysts. For instance, Srini Pajuri, an analyst at Raymond James, recently informed clients that the risks associated with selling H20 GPUs to China are already reflected in NVIDIA's forward price-to-earnings multiple, which was 27x at the time. With the new GB300 chips expected to start shipping in NVIDIA's fiscal third quarter, Pajuri observed that the company's shipments of Blackwell GB200 processors are growing. These elements should help sustain momentum through the year, he said. What about concerns that one of NVIDIA's largest clients, Amazon, is putting a halt to plans to lease additional data center space? Yes, Wells Fargo informed its clients that this was taking place. But in a recent LinkedIn post, Kevin Miller, vice president of worldwide data centers for Amazon Web Services, took aim at the problem. Additionally, Wall Street doesn't seem to be too worried about NVIDIA facing more competition. Given what former Intel CEO Pat Gelsinger recently stated in an interview with Brian Sozzi of Yahoo Finance, I don't find that unexpected. Gelsinger assured Sozzi that it would be extremely challenging for any competitor to unseat NVIDIA. According to him, I've always believed in the 10x rule, which states that you can't overthrow the monarch if you're not 10 times better than him. NVIDIA's most powerful GPUs are 10 times better than any competitor's hardware. When it comes to purchasing NVIDIA stock, should you follow Wall Street's advice? Both yes and no. A stock should never be purchased by an investor merely because an expert suggested it. You should always conduct your own research. It's acceptable if your investing objectives or risk tolerance lead you to steer clear of a stock that Wall Street adores. But when it comes to NVIDIA, I believe Wall Street is correct. For long-term investors, the most recent pullback offers a fantastic opportunity to purchase. It was something to yell about when NVIDIA used to trade at such a discount. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Mr. President, you said that you have spoken to President Xi. When did that happen? China says it hasn't happened.
I spoke to him numerous times. So we're leading and going to Rome, where we'll be attending the funeral of Pope Francis. Some of you are going to go. Anybody going? And it's going to be very interesting. We're going to meet with a lot of the foreign leaders. They want to meet. Trade deals are going very well. I think Russia and Ukraine, I think they're coming along, we hope. Very fragile. And Iran, I think, is going very well. We'll see what happens. We're working on plenty of things that shouldn't be worked on because none of this stuff should have happened. This should have been taken place by Biden. It should have been fixed by Biden, but he couldn't do it, nor could he come close to doing. So anyway, we're going to Rome to pay our respects, and we'll be leaving that same day. We'll be coming back home tomorrow night. And I'll see some of you over there. Otherwise, I'll see you on television.
How was the Whitcock meeting this morning? You said you spoke with President Xi. Have you spoken to him since the tariffs? When did you last speak?
I don't want to comment on that, but I've spoken to him many times. Yeah. From Japan. From Japan, I'm getting along very well with Japan. We're very close to a deal.
According to Patrick Moorhead, the founder, CEO, and chief analyst of More Insights and Strategy, the Trump administration is seeking to end the trade war between the United States and China, and a resolution is probably imminent. According to Moorhead, investors with at least a medium time horizon find NVIDIA stock appealing due to the administration's position. However, Moorhead cautioned that NVIDIA and other big chip manufacturers are in grave danger. What technical or psychological indicators should investors be looking for to assess whether this is a safe level to invest in NVIDIA? Was the question posed to Moorhead. He replied, "The fact that the Trump administration has put itself in a bit of a bind and is looking for a way out of the trade battles is a psychological indicator. This is because authorities are aware that bringing down NVIDIA and Apple, AAPL, will bring down the stock market. I am fairly confident that the trade issues will be resolved within the next 90 days, the expert continued. According to Moorhead, NVIDIA would suffer greatly if the United States attempted to limit the sale of notebook and gaming chips to China, as the company receives 20% to 30% of its revenue from that country. He went on to say that AMD and Intel are in a similar position. Even though we recognize NVIDIA's potential, we are convinced other AI stocks have a better chance of producing larger profits in a shorter amount of time. While prominent AI stocks lost over 25%, one AI stock has increased since the start of 2025. Check out our analysis on the cheapest AI stock if you're searching for one that is more promising than NVIDIA, but that is trading at less than 5 times its earnings. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
First, there are the chips that are at the heart of these data centers. You know I'm going to start with NVIDIA. Now, I have become less enthusiastic about this, not because of NVIDIA itself, but because of the political headwinds involved with NVIDIA. We still got a sizable position in NVIDIA for the Chapel Trust because I'm a believer in their technology. NVIDIA stock's down more than 30% from its January highs, but it still looks pretty cheap. It's 24 times this year's earnings estimates. Keep in mind, those estimates have come down substantially after the effective federal ban on selling their AI chips to China, even the older ones. And that took my breath away, just so you know. Of course, some other semiconductor stocks can get back on track if the AI infrastructure spending never really went away. I like Broadcom, which we own for the Chapel Trust, very big position, and Marvell Technologies, because they make what are known as custom accelerators that provide additional computing power for these warehouses full of servers. Broadcom and Marvell stock are down 25 and 55% respectively from their recent highs. They're trading at very reasonable valuations now. Then there's ARM Holdings, another one I really like. It's a company that licenses its leading semiconductor architecture designs to chip makers, including NVIDIA. Cadence Design Systems, a nice move in that today. Synopsys, they both work. They make semiconductor design software. Oh, yeah, and don't forget CoreWeave, which makes its own AI data centers, essentially allowing customers to rent its clusters of NVIDIA GPUs. This stock's basically back to where it was trading when it came public in late March. If the AI infrastructure theme remains alive and well, I think CoreWeave could be an absolute steal here. Or what else goes into the data center? Well, how about servers and networking equipment? This is a little trickier, okay? The leading makers of servers are Dell Technologies and Hewlett-Packard Enterprise. Sadly, both these companies have major tariff exposure, which is why their stocks, frankly, have just been slaughtered. But now they suffer 10 and 9 times this year's earnings estimates, respectively. So I'm wondering if the bad news has already been priced in. By the way, the sharp activist fund Elliott Management, they just announced a 7% stake in HP Enterprise last week. HP Enterprise, frankly, has not operated that well, but maybe Elliott shakes it up. Oh, by the way, I never bet against Michael Dell. If you do, I need you to do something. Please send me an invitation to your funeral. As for networking equipment, I'm a fan of Arista Networks, which is some of the best tech, but it's been hit extra hard because there's a lot of business with Microsoft, which has started to wobble with its data center investment plans. But as I told a caller who asked about Arista just last night, I think this stock has come down way too much. I mean, this thing is down 44% from its January highs. This is a fantastically run company. It looks interesting to me at these levels. You know what? I'm calling out Cisco Systems, too, long the market leader in networking equipment, though it's also made some big moves into software and by the way, and also cybersecurity lately. Cisco has been holding up much better than many of these other names, only down about 15% from its mid-February highs, 1.5. But it will roar once people get the memo that AI infrastructure spending never went away. It's very inexpensive versus its accelerating growth rate since it made a recent acquisition. All right, now, how about the utilities with nuclear exposure that roared last year because of the data center fuel rise in demand for electricity? All right, here I'm talking about Constellation Energy, Vistra. You might have heard about Vistra during the stock draft earlier this afternoon. Now, these stocks have both fallen nearly 40% from their highs. These two stocks got overheated during the run-up, but they're now selling for barely more than 20 times this year's earnings estimates. They're selling for less than a lot of the traditional utility companies. I think that sounds like an opportunity to me. The strength in inverters earnings also has me think about Carrier Global and Trane Technologies. These are two leading climate control plays that have seen major growth in data centers because you need to keep these servers cool. Now, these two are far from pure plays. They also got exposure to construction with real tariff exposure, too. But if Wall Street embraces AI, they can bounce. I cannot believe how low Carrier's fallen. I feel the same way about a number of classic metal bending industrials with big AI infrastructure exposure. Think Cummins. Boy, that stock's been just blistered. Makes big backup power generators. You can't have a data center go down. Tonight's guest, Dover. All right, they make these liquid cooling products, among many others. Or Eaton, another stock just been crushed. These are two that the trust owns. They make electrical power management. Hubbell, Parker, Hannafin, Powell Industries. All good. All of them. Now, again, these are very much cyclical companies, so you can't just buy them if you think we're headed into a recession. Most have seen their stocks get slaughtered because people think we are going into recession. But if we get a reprieve on some of the more these tariff issues and investors return to the AI trade, I just gave you everything that's going to fly again. Bottom line, when it comes to AI infrastructure, Wall Street's become very skeptical. And I don't think that's really changed. But looking at what we've seen so far this earnings season, I'm feeling much more sanguine about the story, especially if we get some more trade war de-escalation from the White House and stocks stay as cheap as they are. And man, are they ever cheap.
For the king of artificial intelligence, AI chips, NVIDIA, things have gotten worse this year. It all began with the rise of DeepSeek, a Chinese startup that created a chatbot that could compete with OpenAI's ChatGPT using less sophisticated NVIDIA chips, ostensibly for a far lower price. At a time when industry valuations were quite high, this caused some investors to wonder what the future of AI infrastructure spending would look like. Since NVIDIA sources a large portion of its chips from Taiwan, the business therefore had to contend with the possibility of tariffs. Despite excluding semiconductors from his tariffs, Trump's government just given NVIDIA's stock even another setback. NVIDIA said in a filing on April 15th, following the market close, that the U.S. government had notified the business that it would require a license in order to export its H20 chips to China, including Hong Kong and Macau. The government informed NVIDIA that the limitation was placed in place to keep China from acquiring components that it could use to construct a supercomputer. Because of this, NVIDIA stated that it anticipates incurring a $5.5 billion charge in the first quarter of fiscal 2026 as a result of H20 chip inventories, procurement obligations, and related reserves. Since the Biden administration, NVIDIA has had to contend with more stringent export regulations to China. To adhere to earlier limitations, the business actually developed the H20 chip, which trains AI models more slowly than some of its most sophisticated devices. Trump's most recent order is probably related to the strained U.S.-China relationship, but given that similar steps have been accumulating across several administrations, it's also plausible that this export ban may outlast the ongoing trade war. The stock of NVIDIA has dropped almost 24% so far this year. Wedbush analyst Dan Ives called the new limits a blockade by the U.S. government and the first shot across the bow during an appearance on CNBC. In the short term, he said, Wall Street analysts are probably going to assume that NVIDIA will not make any money in China this year and lower their earnings forecasts by 10%. China accounted for over 13% of NVIDIA's total sales in fiscal 2025, or $17.1 billion. From the standpoint of margin and earnings, the company will suffer short-term consequences from the export limitations and ongoing uncertainty brought on by the trade war. However, this headwind is already evident in a large portion of this year's sell-off. Nonetheless, analysts are still generally optimistic about NVIDIA's position as the industry leader in AI chips, even though the field is still in its infancy. Although the total addressable market may be less at the moment, AMD and other chip companies are dealing with comparable issues. In the meantime, last quarter saw $11 billion in revenue from NVIDIA's most recent Blackwell processor, the fastest product ramp in the company's history. The company's next chip, the Vera Rubin, which will be faster than Blackwell and might be ready by 2026, is already being discussed by CEO Jensen Huang. NVIDIA intends to release even more advanced products in 2028. The stock is currently trading close to its lowest level in 2 years, at 23 times projected earnings forecasts. This year may be difficult for the industry, but if you can look at it long-term, now is the right time to start buying shares. NVIDIA may eventually reach its peak of $153 per share, which would indicate a large increase from the current price. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
To talk about the markets, we were just talking about that 4,800 level that we saw at our lows. We're looking at 5,400 on the S&P now. What are you watching this morning? Good morning, Kevin.
Good morning, Nicole. Yeah, I mean, if you're kind of looking at the market breadth right now, we only have around 24% of the stocks in the S&P 500 in the green, but it's really the mega cap names that are really trying to hold us up for now, and you'd like to see breadth kind of expand. If you look in the internals, it's more of defensive positioning so far this morning here, where you have consumer staples up, you have real estate up, some consumer discretionary up as well. You also have consumer communication services, that's after Google here. But what we're looking for going into this morning, Nicole, is once again, we're hitting this key area of resistance right around that 54.80, 54.90 level here. And that has been something that has been a little bit of a challenge to try to break above. And there is actually a lot of positioning that is there to the upside, sitting at around that 5,500 level here. And that also coincides with this key gap that we have. We already had one gap that we filled over throughout the week here, but now we have another one basically sitting between 54.93 to the upside to around 55.78. So since we have that gap, there's going to be a little bit of a void. We'll have some price discovery here, but we want to be able to stay above this triangle pattern that we actually broke through yesterday, as well as stay above that 20-day moving average. That would be a win for this week so far. If we do have a little bit of a breakdown, look for that 20-period moving average is going to be your area of support. And going into the session here, if you're looking at the today's levels, kind of looking at 5,500, once again, that first area of resistance. If we break through that, I'm not seeing a lot of positioning above, maybe around that 55.30 level, but above that, it's going to be 5,600. To the downside, 53.85. We actually did see some put flows actually show up there earlier this morning. Let's see if that's going to be a key area of support that the market tries to bounce off of. Actually, if you kind of look at it on Wednesday, 53.85 was a key area of support where we actually utilized it around 3 times to test it, and then we broke out a little bit higher here. So overall, we're actually looking pretty decent for the week. We just need to have another follow-through day, but it's very hard to, for perspective, Nicole, we're up around 6% over over the last 3 days, it's really hard to try to maintain those gains. But if the bulls can actually pull it off here, I would think that would be a win for them to try to reclaim some of these losses that we've had over the last couple of months.
Yeah, and you tell me whatever else you're watching here, but at the same time, I was really thinking about what Don Luskin said, how if you look at the S&P 493, it's unchanged year to date. I didn't double check that, but I'll take his word for it, that we're around the unchanged line. I think that's very interesting. When you look at that, because the Mag 7 is what the weight is, and I know you're looking at some of the NASDAQ levels, but some thoughts on that?
I would have to confirm that as well. I mean, if you look at the S&P 500 equal weight, which obviously balances out those market caps, I mean, we still did see a significant pullback to the downside. Yes, the mega cap names did pull back, but we also saw a pullback in a lot of the other sectors as well. So I can't confirm the 493 commentary, but just looking at the equal weight, we did have a significant pullback to the downside here. But from a technical level, I will give the bulls a little bit of something to really think about, especially going into this weekend. If we actually pull up the E-mini S&P 500 4-year weekly chart, you could actually see maybe a bottom that has been put in here. We don't know that for sure until we actually get closer to the highs. But one thing that we actually can see on this chart, I have some average anchor weighted average prices here. That basically just averages out all of the trades as well as the volume here. And one key area has been those October 2023 lows. You can actually see last week or 2 weeks ago, we came down and literally touched it to the T. That's that red line at the bottom there, right around 48, 43 for the E-mini S&P 500 futures here. Saw a nice little bounce above. And what we actually did accomplish yesterday and this week is actually we broke above the anchored volume weighted average price from the October 2023 lows as well. That's the first area that you really had to focus on. Where can we see resistance for the E-mini S&P 500? The 5625 level. We're taking the average, the anchor weighted average price here from the highs as well. And that has been an area of resistance, Nicole. We're getting very close to it. Once again, we're sitting at around, let's say 100 points, 105 points away from that level. That's going to be your next key area of resistance if you're just looking at the futures. RSI, once again, hit that oversold level. We are bouncing above that now. MACD is trying to flatten out. MACD has not given us the full-on bull signal yet. But if you look at past cycles and you think this is a traditional pullback of 20% and this is going to be the bottom, based on these trend lines that we have, based on the anchored volume weighted average prices, you can make a case that these are the lows. For the bears, you're going to need to have something that's out of the ordinary, another black swan type of an event to really break us lower. That's why we saw that breakdown back in October 2022, which is a little bit different than what we saw in October 2023. So it's just kind of like a little bit more of a make or break. You got to trade this market as it's a traditional pullback until you see otherwise. And I think the big question mark right now is how is the market going to react to earnings announcements as companies pull guidance? How is the market going to react when we will see weakness in economic data over the next 3 months or so? Is it already priced in, or is that something that's going to be a shock? That is the big question mark. But I think right now, if you're just looking at it from a traditional standpoint, the trend tells you, if you look over time, that yes, the market probably is going to continue to see a counter trend rally to the upside here until we have something else that materially changes the outlook for the economy.